the market could be trying to transition here, and that's something we're going to deal with from time to time. You know, a downtrend doesn't always maintain a perfect 4 to 6 o'clock angle throughout the entire downtrend. Sometimes we're going to get shifts in it. And that does mean for a brief period of time, we may see the market shift out of a 4 to 6 o'clock and take on maybe a 3 o'clock or a 2 to 4 o'clock type angle. It does happen. If you're in a short and you're not stopped out, you can hang on to that short, but you cannot enter a new short when the market transitions. Again, let me reiterate. If you're in the trade and the market cycle transitions to 2 to 4 or 3 o'clock, gets a little sideways, that's fine. You can continue to manage that trade as a swing, whether that be a long or a short, but you cannot enter a new swing short in that environment because the market is no longer trending in the proper direction. It's no longer in the right market environment for a swing trade. So you can manage it, but no new entries. Okay? So again, the whole idea is when you first enter the market, let's kind of recap the whole trade and risk management. Okay? When you first entered, the red was where we would have first entered. That was our short sell for the myriad of reasons we already talked about, right? We talked about the point of validity. That's this top green line here. In fact, let me thicken it up here just so we can kind of distinguish between the two. So it's my top thicker green line up there. That's the point of validity. This thinner green line was an option, an alternative for what I call a cheated in stop. In other words, I acknowledge the point of validity is up here. I may not be willing to risk it. So instead, I'll use a near-term high or low. I'll use resistance in this case to have an alternative stop-loss placement. My risk is my entry, which is the red line, to either the top green line or this lower green line. That's my risk. My reward is the red line to the first yellow line, so this first support level. When this trade is entered, we have a risk-based stop, which means basically this. If I was to hit either the lower green or top green line, my cheated in stop or my point of validity stop, if prices were to hit either one of those, it would represent a loss to my account, a risk-based stop. Okay? That's the first type of risk management we have, that risk-based stop. My entry to what would represent a loss to my account. That's the not fun one. Okay? As prices move in our favor, however, as they start moving down lower, if I hit the first profit target, I get to move from that risk-based stop to a break-even, which is basically my entry, the red line in this case, plus 5. I want to put my break-even stop just beyond the reach of my entry price. So if my entry was this 35.80, my break-even would be 35.85. Okay? All right, then, and that's if we hit the first initial profit target. What if we get below that? What if we start moving towards 35.20? If we hit 35.20, super easy. We move our trailing stop from the break-even, which was 5 pips above our entry, to 5 pips above our first profit target. Here's a good question. What if we don't quite get to 35.20? What if this thing stops at 35.27? One rule of thumb you can use, and it's up to you how aggressively you want to manage your trade, but if you get halfway to your second profit target and you really want to protect what you've earned, what you've made in terms of the market going in your favor, if you get halfway to that second profit target, you can go ahead and trail your stop to the first profit target plus 3 to 5. Okay? So my break-even is, I say break-even, but it's a 5-pip risk because I don't want to put my stop-loss right at my entry because my entry was resistance at one point, right? So I want to put it just beyond the reach. So that's why it's 85. So I am risking 5. It's break-even is just the idea behind it, but you are risking 5 pips per lot. Okay? I do want to make sure everyone understands that. It's not exactly a zero break-even. It's the mindset behind it. You are risking 5 pips. Okay, but the best way to utilize support and resistance is to allow it enough wiggle to work, to actually allow the resistance to work. So that's why I put it just beyond the reach of it. So the other idea behind the prices moving down lower is if you want to manage the trade a little bit more aggressively, prices haven't yet hit 35.20, but they're halfway there. Feel free, if you want to, again, it's a little bit more aggressive, but you can go ahead and trail your stop to 35, 40, 35, 39, that area. Okay, and you can do that all the way down. But again, let it at least move halfway, because if you start aggressively putting your trailing stops right on top of current prices, you're not going to give the market enough wiggle. I mean, the market needs some room to move. The whole idea is finding a good balance between where is there support and resistance and still letting the market move in the direction that you're hoping it's going to, because nothing moves straight down. It's going to wiggle around a little bit. Notice the wiggle we're seeing here now. It's not fun to see some of what we saw moving in our favor given back, but we're not in a situation where necessarily at this moment we're at risk of being stopped out at the break even, if that's what we were using. Notice we didn't really break 35.35, so I'm not in a position here where I could be trailing my stop yet. This is still a break even type position management. Okay? So that's the way we manage the trades. There's a lot of questions about position sizing, and I have a very different take on position sizing, so let me tell you, because it's very simple. I know it's unusual, but this is what I've found. Position sizing has nothing to do with what's in your account. If you're a brand new trader and you stink, if you have $1 million in your account, you're still going to stink. If you're a brand new trader and you're pretty darn good and you have $100 in your account, again, it's not the amount of money in your account is no reflection of skill. I think position sizing should be based on experience and skill. In my mind, you have to earn position sizing. By that I mean you follow what I call the 3 C's. Okay? And I know we're over our time here, but if you guys want to hang out, I'll be more than happy to go over this quickly and how it applies to position sizing.